What we're going to do next is before we make a trade anytime now, we're going to click up here on this earn date up here. You see earn date over here. And what that's going to do is it's going to bring all the earnings to the top of the chart. So what does that mean? Well, all these stocks have earnings dates where the company announces the earnings, and there's a big to-do about whether the stock is doing well or it's not doing well, and the price can fluctuate a lot. We do not want to trade any stocks that have earnings coming up before our options are going to expire. So what I mean by that is, if we look up here at GILD, you see E1, E1, one's all the way across here. Over here you see 3, etc. What that means is that earnings are 1 day from now. Earnings are 1 day from now, 3 days from now. If we go all the way down to the last one over here, you see earnings are in 51 days. So what does that mean to us as far as trading goes? Like I said, we do not want to trade stocks where the earnings are going to come before the end of the option cycle. So let's use an example. So we'll start somewhere in the middle. Let's just start here at GILD. We double click it, and let's say we wanted to make a trade. So we'll go to the vertical and just click any short call vertical. Doesn't matter. Well, what does it say here? 53 days. This is close to 45 days as possible. 53 days, 53 days. So the earnings date is 1 day from now. 1 day is less than 53. We do not make this trade. It's that simple. So let's go back to our list and go further down. Just to give another example. Right here it says HD, which is Home Depot, earnings 22 days. Well, we already know now that the vertical that we're going to trade at this point is going to be 53 days away. Well, the Home Depot earnings is only 22 days away. The options don't expire for 53 days. So we are not going to make a trade in Home Depot either. We do not trade stocks where the earnings are going to occur before the option we're trading is going to expire. So if we continue down this list, all the way to the bottom you see the longest way away is 51 days. Even Oracle we can't trade. It's 51 days away, but we know that these options don't expire for 53 days. Well, 51 is less than 53. We're not trading Oracle either. So we're going to take all these stocks off our list as potential trades, and all we're going to do is we're going to scroll down till we see stocks that don't have earnings with 53 or less in the earnings number. And so that would start right here with Amazon. So any of the trades from Amazon down are perfectly fine to trade. Or the easy way to do that is once we see the earnings up here, we can hit earnings date again, and it's going to put those at the bottom, and now all these stocks up here are perfectly fine to trade. And we go all the way down until we get to Oracle, and that's where we stop. Anything from Amazon up through all these are perfectly tradable stocks. That's how easy that is. So again, we can create our own watch list. We can use an existing watch list. But whatever we do before we make a trade from now on, we're going to check the earnings date and make sure that the earnings does not fall in a short amount of time before our options are going to expire. So if our options are going to expire in 45 days, we do not trade any stock with earnings 45 days or less. 46 or more is doable. 45 or less is not doable. That's trading rule or checklist rule number 3.